Hello and welcome to Investing with Humility. My name is Bruno, and today I'll be bringing you information about 401 withdrawals. So, when are you eligible for 401 withdrawal? So, the different situations which apply to the plan, you can be eligible for withdrawal after you reach the retirement age, which is 59 and a half. If you work for a public sector, your employer may allow you to be able to withdraw sooner, such as the age of 55. It depends absolutely with them. Um, you may apply for an early withdrawal. Now, if you apply for an early withdrawal, you'll still have to pay the income taxes that you have to pay, as well as a 10% early withdrawal penalty. Now, if you want to avoid the early withdrawal penalty, you can go ahead and request a hardship withdrawal. When it comes to a hardship withdrawal, you have to meet the qualifying circumstances under the IRS guidelines for requesting a withdrawal based on a hardship. So, if you meet any of those situations, then you'll submit your request and take a withdrawal. And what that will do is you'll still have to pay the state taxes, but you won't have to pay the early withdrawal penalty, which you would be paying if you're taking a withdrawal before you're 59 and a half. All right. I hope that is clear. Other types of withdrawals are in-service withdrawals, and what are these? This is if you're past the age of 59 and a half and you're still working. So while you're still working for the current employer, you technically are not eligible to take a withdrawal unless it's an in-service withdrawals, and you can only take those a couple of times in a year. So you can request an in-service withdrawal, um, but in case, let's say you have separated from employment and you do not need to take a withdrawal until you know later, you're not technically you know required to take a withdrawal until you're age 72. So once you reach age 72, then you'll be required to start taking your withdrawals from your account, and that is called a required minimum distribution. And this age can change in the near future. It may jump to 73. It just depends with the IRS requirement where they release on this. Also, please know if you're still working until at the age of 72, you are not required to take a required minimum distribution until you separate from employment. So it's really important if you have separated from employment to tell your employer to update your records accordingly with the record keeping company so that you can start receiving the required minimum distribution. Because for some people it's different. Um, but technically, that is how it works um, when it comes to withdrawals. All right. So, hardship withdrawals. So, these are really popular because most of the people have a 401k and they want to know how they can access their money before they're at the age of 59 and a half. So, there are a couple of qualifying circumstances where you can take a withdrawal on your account. Um, I'll just release them as we go. The first one is medical expenses not covered by your insurance. So, you'll have to present with your withdrawal, a record of these medical circumstances which are not covered by your insurance, and then you can submit for withdrawal. The second circumstances is realized losses of wages, not including lost wages due to actions of yourself. This means it's like if you have just decided to leave the employer, then that doesn't qualify. But if, for example, you are let go or something like that, then you can submit a hardship withdrawal. Damages to your home, personal belongings, or an accident or natural disaster. Let's say there was a fire, like a wildfire or something like that. It damaged your home, or there was a flood. That's not really totally your fault. So you can submit a hardship withdrawal, and it can be considered as a hardship withdrawal as long as you can demonstrate. Now, for some companies, it's different. For some companies, you really do not have to do much. You just have to select one of the qualifying circumstances. But for other institutions, you have to show proof and paperwork related to this situation. So you want to get your ducks in a row so that you're able to present this material. Okay, other circumstances include loss of property due to theft. So if, for example, your car was stolen, your home was stolen, you can just submit a police report together with those things and demonstrate that, your property was stolen. Legal bills involving criminal charges. This need to be involving you. It cannot involve, your friend or someone like that. These legal bills have to be involving you directly or your dependents. Um, Prevention of foreclosure or eviction of primary residence. So, if, for example, you're about to be foreclosed, they have sent you warning after warning, and you are at your 6 months that you have not been able to pay your mortgage and you're about to be evicted, you can submit, so that you can get the funds. Sometimes you could try to submit it early, but you may get some pushback that this is not saying that you're going to be evicted. Some record keeping company, they want to totally see that you're going to be evicted before they can go ahead and approve the withdrawal. But again, with all these situations, as long as you can show proof, then you will get the hardship withdrawal, and then you can just take your money. In case you didn't have to put a lot of information, in coming tax time you have to demonstrate. You can either attach this information with your tax returns, or you can reach out to a tax advisor and they can tell you how to handle the situation appropriately. Lastly, funeral expenses for a dependent family member. So if this funeral expenses either involve you or your family member, then you can submit, and the withdrawal will be processed and send the funds to you. Please keep in mind the taxes that you're supposed to pay for any withdrawal under 401k or under any retirement plan. These are regular income taxes. So, they will start, from 20% or higher for federal taxes. And for state taxes, it will depend on the state that you live upon the time you take a withdrawal. So it's not the state where you are working at, it's the state that you will be taking a withdrawal at. I'll give you an example. Let's say you're working in Maryland, and we know Maryland has, state income taxes. And let's say once you retire, you move to Florida, and we know Florida does not have a state income taxes. So all you have to do is pay federal taxes upon your withdrawal. So knowing that in mind, you can decide what you like to do. But those are the types of situations that apply. You can either request for hardship withdrawal. Typically, it's only going to be a lump sum withdrawal, but you also have an option of requesting a partial withdrawal or installment withdrawals. And installments withdrawals can either last below 10 years or more than 10 years, and the different tax rules for those. If you want more information on those, you can just leave me a comments below. Any thumbs up, of course, and I'll be happy to go ahead and discuss different types of withdrawals. I can't really go into detail as which record keeping company they will do what, but when it comes to taxes, just know that you'll be paying at least 20% when it comes to federal. The state taxes will depend with where you live. Early withdrawal penalty will apply to you if you're taking a withdrawal and you are below the age of 59 and a half, and you do not have the qualifying circumstances for requesting a hardship withdrawal. So I hope that information helped you. If you have if you have to take a withdrawal and you're not 59 and a half, please make sure you meet the qualifying circumstances listed here. That means, the 10% early withdrawal penalty will be waived. Um, and or else you can just request a regular withdrawal. But this is all about withdrawals when it comes to a 401k. I hope you enjoyed the video. Give us a thumbs up and have a wonderful day. Thank you.